Good evening. Britain's banks have been warned that unless they start lending money again, the government might be forced to intervene. The Governor of the Bank of England, Mervyn King, said that the lack of lending to households and business was the single biggest threat to the British economy. His warning was echoed by the Chancellor, Alistair Darling. Our business editor, Robert Preston, has more details.
Rebuilding our banks so that they start lending properly again has been slow work. In the mortgage market, there's been a total collapse in new net mortgage lending from £108 billion last year to a staggering and unprecedented less than zero forecast for next year. And it's a Treasury report that says so. It means that as homeowners pay off their mortgages, banks are putting less back into the mortgage market than they're taking out, which is just one example of how lending has been contracting. And that matters.
I'm in no doubt that the single most pressing challenge to domestic economic policy is to get the banking system to resume lending in any normal sense.
Banks can only lend what they borrow. In 2001, our banks were only lending money that they borrowed from British customers like you and me in the form of deposits. Their net reliance on funds from wholesale money markets was zero. That's a safe way to do banking because most of us can't move our money outside the UK. However, our banks then went on a borrowing spree, and by earlier this year they borrowed £700 billion from wholesale money markets. Those wholesale providers of funds want their money back, and this demand for their cash took our banks to the brink of collapse a few weeks ago, until the British taxpayer rode to the rescue. Taxpayers are now supporting our banks to the tune of £600 billion, so why are they still not lending?
They are giving up profitable lending opportunities in order to behave defensively and reduce the size of their balance sheet.
This lending shortage isn't just a British problem, it's global. And in Washington today, the authorities announced $800 billion of taxpayer support for mortgages and consumer loans. That lifts total US public sector help for banks and lending to an eye-watering $8 trillion. There may be more to come.
We are going to have to jumpstart the economy, and there's consensus that that requires a bold plan to make the investments in the future. But we have to make sure that those investments are wise.
And this US support for mortgage lending may be imported to the UK.
The report I commissioned from Sir James Crosby to look at whether or not you could get more money available in the mortgage market by guaranteeing it is certainly something that we do need to look at.
What if lending still doesn't improve?
In the last resort, you can't rule out measures where the government would have to intervene directly to ensure that that flow of lending continues.
Which sounds like the government directly running our proudly independent banks. Robert Preston, BBC News.
Well, as the Chancellor planned his pre-budget report, he considered increasing VAT by 1%, along with other tax rises planned for the future. A Treasury document published yesterday says that VAT will rise to 18.5% in 2011. The government says the document was published by mistake and that the VAT option was rejected. The Conservatives have described it as proof of what they call Labour's secret tax bombshell. So let's join our political editor, Nick Robinson at the Treasury.